Good afternoon to you both. Santosh, if I start with you, we've seen some big price cuts of late, particularly in WeWork. Is this a sign that we're starting to get to the end of the cycle where these loss-making companies can push through an IPO almost sort of regardless of the valuation they're seeking?
No, I don't think so. I think the market needs to get more rational. Maybe it just got ahead of itself. I think the market's getting more, they want a path to profitability. They're not just willing to just throw money at it. So you're seeing some rationalization. The IPO pipeline is robust, so there's nothing wrong with that. What you'll see is more rationalization in terms of pricing. So that's totally fine. Happens in the IPO game. You overshoot and you need to pull back a little bit.
Mark, how would you characterize the health of the IPO market now that we've gotten through a quarter or two on some of these companies being public and a lot of misses?
Well, you talked about a few misses, yet they were some of the best performing stocks of 2019 up till this morning. So I think there's still huge receptivity by portfolio managers, but I think we are seeing some of that price discovery. You got companies like Zoom that's growing revenues over 100%, and the question is, what do you want to pay for it? And we've gone through this price discovery before, and we're going to learn a lot going into the fall because there are several more high-profile IPOs. We've been talking about WeWork, as everybody else has, and you're going to learn a lot about the investor base. But I don't think the appetite is gone, and I think they're going to be talking about a lot of good stories through the rest of the year.
Santosh, you invest in some of these companies before they go public.
Absolutely.
Have you seen extraordinary prices even when they've been private? Again, coming back to the likes of a WeWork, who's halved its valuation from a supposed last valuation round. Also, Uber, high profile, ended up listing below its private market valuation. Is it the private market that's pushed these things up too much as opposed to greedy entrepreneurs and founders?
Yeah, I think to some extent, towards the end, there's a rush to get in and be part of the whole process. You don't want to miss out on the next big thing. So you have a little bit of that. But I think overall, you'll see that it'll rationalize, like I said earlier. It's totally part of the process, so I wouldn't put too much into that. I think price rationalization is part of the process. It comes back to normal.
Karen, where are you on these IPOs?
There's this sort of been this, what I call it gap growth at any price. And now we've reached the any price for some of them. It's just too high. So I was actually wondering, are you seeing less appetite for that giant growth but don't make money yet?
No, I think people want good stories, and they will invest in that. There's big appetite for that. So in the early stages, you will see that. So see, that's what happens in the private market. You're valued more on the sales, on the traction, on how is the concept being received well. So you're really valued. The funding rounds are based on how well the revenues are going. So you'll see that bump there in the early rounds. But when you come to the public side, then all the rationalization takes place, the scaling factors, the operational issues take over. So you see some pullback in the public markets, but overall the stories are intact. You have to wait a year and a half to two to really get the story right, let the models really take hold. And so it's no point rushing in. They're not quarter-to-quarter stories. It takes a while for them to smooth out.
Mark, do you think that's the problem with the ride sharers? I mean, what do you think is the biggest skepticism from Wall Street, facing the Ubers and the Lyfts? Why can't they get out of the gate?
It's a combination of things. It's valuation that was obviously robust. It's a path to profitability that's going to take years, not quarters. And I think there's just a whole question mark whether that business, the taxi business, which is what it's being sold as now, does it scale into something much larger? Is it becoming much more of a transportation company versus a ride-sharing company? And I think that's the question right now, and that's why the stock hasn't acted very well. If you believe it's a taxi company, you don't want to own it. If you believe it's going to fundamentally change the way we ride-share or do autonomous, you'll probably want to own it. That's the big difference, and that's why stocks trade every single day.
Santosh?
I think Uber is being unnecessarily punished or over-punished. They're growing very well. They came out of the gate growing 70% plus. Every metric is growing on the right side. Okay, Uber is pulling it back a little bit. Uber needs to settle down. Too many moving parts there. But they'll come together in the end. But at this point, and they've already said it'll take 2 years for profitability. I think we are rushing every quarter, getting the headline news, and we are kind of bothering about it. But I think they're on the right track. So you'll see that they will execute. And we put the money on the line for them, so I think they will.
You're not in WeWork, are you?
No, we're not. We passed on that because we're not. It's really a real estate company, even though we looked at it, but we didn't realize the risk reward was really not right for WeWork.
Does it hurt the prospects of Airbnb, which you do earn?
No, it does not. Airbnb is executing very well. It's profitable already. It's kind of expanding beyond its core business. So by the time it comes out, it's going to be a very well-balanced company, very diversified company, and it's executing very well.
Quickly, Mark, is WeWork company specific? I mean, so many haters.
I mean, it is so fascinating to me, Sarah. I talk to a lot of portfolio managers as I have over the last 25 years, and the disparity in terms of expectations for WeWork is probably the largest gulf that I've ever seen. I mean, you have growth portfolio managers who believe in that story, and you have value portfolio managers who think the company is not going to survive. I've never seen a gulf quite this big. So it is going to hurt WeWork, obviously, as it has potentially, given the recent talks of valuation. But I think it is very, very company specific, and I think that's going to be the case going into the fall.